In Forex trading, it is important to monitor prices as they rise and fall. You can do this in many ways, such as watching signals in real time, but the most popular method is to show the price on a chart that allows you to see how the price is doing on the main points. There are several types of charts that are popular with traders, including line charts, bar charts, and candlestick charts. Each type of chart displays information a little differently than the others and has its own advantages. Line chart. Line chart is easiest to read. This is mainly because line charts only show closing prices. In this way, they reduce the noise of the critical moments of the trading day, such as gaps, highs and lows. A line chart usually shows a single line connecting all the closing prices for that period. Below is an example of a line chart as follows. Since the closing price is often considered the most important factor, it is understandable why line charts are popular with investors and traders. Line charts give a clear and easy view of the current market situation, and they are generally the best qualified for those who want a quick survey of where the market is headed. Bar chart. A bar chart, also known as an OHLC chart, displays 4 points, the open, high, low and close, OHLC, of the period. You can think of it as a slightly better type of line chart because it displays more information that you can use to help with your business analysis and reveal more information about price movements. For example, if the distance between the gap and the range is very far, it means that the price has done a lot during the bar. To combine a few, that will mean that there is a high turnover time. In the AUD/USD chart above, you can see not only how prices are displayed in terms of bars, but also how there are high and low periods. This is especially useful in trading as it indicates times and areas where there is a lot of interest and indecision. Candlestick chart. The most popular chart is the candlestick chart. A candlestick chart has two distinct parts, namely the body and the shadow, wick. The highs and lows tell us the opening and closing prices during a given time period. The top and bottom of the image show us the highest and lowest prices reached during a given period. Similar to a bar chart, candlesticks show us the open, high, low and close, only in a different form. In fact, many traders consider the candlestick chart to be an improved version of the bar chart, since the other information they show can be used to create candlestick patterns, more on this later, which will help in explaining the market in such a way. Bar charts and line charts cannot. Generally, if the closing price is lower than the opening price, the body of the candle will be red. If the closing price is higher than the opening price, the body will be green. In this case, the red lamp tells us that the price is falling, while the green lamp tells us that the price is rising. This is an important point to know. While red and green are popular ways to show falling and rising prices, there may be other variations such as black, white and blue, orange. However, what they represent is more important than their color choices. Using the same AUD/USD example shown earlier, you can see how prices differ when shown on a candlestick chart. Thank you for watching us. Please subscribe us to learn more about Forex trading and join us on Telegram to get free Forex signals.